Hey everyone, it's Eric Green. Welcome to this week's podcast. I sort of changed my mind as to what I was going to do this week because I'm seeing this come up frequently. And what I'm talking about are what do you do when you're dealing with an auditor? For lack of any better term, this is actually what my knee-jerk reaction is. What do you do when the IRS auditor you're dealing with is batshit crazy? And I don't say that lightly. And before we get started, I want to make it clear, I do this for a living. I have friends at the IRS. I respect the IRS. It aggravates me that Congress will not properly fund the IRS because I believe the taxpayers are really, we're taking the brunt of this. Right? And they're saving money. They are making it worse and worse for taxpayers and practitioners to deal with issues that come up. Okay? Now that said, there have been moments recently where I'm beginning to consider whether the IRS hasn't simply lost its mind. And so what I wanted to do is just review some of the things that we're seeing. And what you should be doing about it. What do you do when you're dealing with that bully across the table? What do you do when the auditor really seems to have taken leave of their senses and is just irrational? Okay. Now, I know many of you probably have read the New York Times article that I think it was the New York Times that pointed out that the IRS has actually been rehiring former employees that were let go for cause. I mean, people who were damaged. I'm not even talking about those people. The auditors that I'm talking about are auditors I've dealt with for a long time. So these aren't the damaged people we're bringing back. These are people who have stayed at the IRS, kept their jobs at the IRS, and just seem to have taken leave of their senses recently. Okay? If you're new to the podcast, I'm Eric Green. I am a partner with Green & Sklarz. I am the founder of TAXREPLLC, which is a coaching program for CPAs and EAs and lawyers to build their representation practice. I am a journalist for I'm a columnist for the Journal of Tax Practice and Procedure. I am a fellow of the American College of Tax Counsel. I'm a past chair of the Connecticut Tax Bar. I'm a past chair of the American Bar Association Tax Section Committee on Closely Held Businesses. I have the podcast. I'm the founder of the New England IRS Rep Conference every year at Foxwoods for about 700 accountants. I do a lot of this, all right? And we have a boutique tax firm in Connecticut and New York, Green & Sklarz, where this is mostly what we do. All right? So I feel that I'm in a pretty good place to kind of, opine on some of the things that we're seeing. So what I want to talk about, as I mentioned in this week's podcast, is what do we do when we're dealing with an auditor that is obviously nuts, all right? As my law partner likes to say, a couple beers short of a six-pack, right? Or more to the point, what do you do? How do you deal with the bully across the table? Because in all honesty, they have a lot of power. They have the power to make your life miserable, your client's life miserable, but there are ways to deal with this. Okay, and by the way, if you're a CPA or an EA handling this, if you're a taxpayer, you're not alone. We're a law firm. We are tax litigators, all right? We are in court all the time with the government. We get this stuff too, all right? The difference is we're much more difficult to intimidate. So with that, what I want to point out, this is literally just the stuff we've seen here within the last several weeks. The auditor opens up the initial meeting with the taxpayer by threatening them, all right? The auditor begins issuing administrative summonses for information that they've never requested before, right? Auditor fails to consider collection from the outset. They refuse to look at records, or they disallow expenses that you can document just because. And I want to go through these items, item by item. Right? Now, let's be honest. Few taxpayers are happy when they get their audit notice. In the Internal Revenue Manual, at one point, it talks about the fact that the audit is an educational opportunity for the IRS to interface with the taxpayer and help educate the taxpayer. Now, I'm just going to tell you point blank, having done this for 18 years, most of my taxpayers do not view this as an educational opportunity. Most of them view this as threatening, economically devastating, and incredibly frightening. Okay? And most auditors, I will tell you, generally the auditors I deal with are very good. I'm not going to name anyone on the podcast, but there are some that I actually enjoy working with. We generally get to the right results. They listen to me. They are courteous to the taxpayer, and we move the audit along. But there are a handful, like I said, who have recently seemed to have, like, their worst seems to be coming out in them. All right, and I'm not sure if it's the funding climate at the IRS, the pressure at the IRS. I don't know what has brought this about, but I want to go through these, and then I want to tell you what to do about them, okay? You don't need to sit there and be bullied. And you also don't need to start bringing in lawyers. I mean, don't get me wrong, Jeff and I love referrals, always have. But the goal here, if you're a CPA or EA, is you do the case. You can do this, all right? We're simply here to help. Right? So the point, though, is what we want to do is try to humanize the audit process. What that means is we want to explain to our client what's going to happen. We want to deal with the auditor professionally. We want to try to do what we need to do so they can wrap this audit up and we can get this closed for our client and get past it. So we're all about win-win, okay? And I'll tell the auditor this. You know, if I think things are starting to go sideways, look, we're all for win-win. You ask for stuff properly, I will get it to you, I will work with you, win-win. However, if the auditor thinks we're going to play win-lose, I do have to tell the auditor, my clients aren't paying me to lose. Okay? So, put another way, I can be as big a jerk as they can. It's unnecessary, but if that's the way we're going to play, then that's the way we're going to play. Okay? All right. Well, let's just talk about this. The very first thing I wanted to mention to you was the threat to the taxpayer right out of the gate. The client is sitting there with the auditor. I wasn't in the room. The CPA was there. And the CPA said, you know, what records would you like to see? And, you know, when would you like to come in and whatnot? And the auditor said, I want the download from the QuickBooks file. Now, when we talk about QuickBooks, by the by, they are entitled to the electronic records. Okay? But the CPA really felt that was inappropriate for the first comment and said, well, you know, if you need to, then maybe we'll give it to you. But for right now, I just, you know, I'll show you the records we have. And the auditor said, so in other words now, this is going to get nasty, is it? You really want to go there? Do you really want me to issue summonses and put her out of business? Is that what you want? And right off the bat, she's threatening to put somebody out of business. I don't know where this came from. What I think the auditor should have said is, look, we are entitled to see the QuickBooks file. It's something that's required. I'll look at whatever you have today, but just so you know, I am going to need the QuickBooks file. I'll send you an IDR, information document request, making that formal request of you. And that's it. Move on. But immediately began threatening to put the client out of business. Okay? We have a taxpayer bill of rights. Right? And by the way, the IRS takes this very seriously. When I really want to up the ante, if I'm having an issue, and I mention that I believe the taxpayer's bill of rights have been violated, I will get a manager's phone call pretty quickly. Right? It's been through a number of iterations that I've shown you there. Okay? This is the current taxpayer bill of rights. We have the right to be informed. We have the right to quality service, the right to pay no more than the correct amount of tax, the right to challenge the IRS position and be heard, right to appeal the IRS decision in an independent forum, right to finality, right to privacy, right to confidentiality, right to representation, and the right to a fair and just tax system. So the threat right out of the gate, does that sound to you like quality service? It doesn't me. And I will tell you, the client was very upset by it. So upset that that's what led them to call us. Okay? So right out of the gate, the auditor has already insulted and frightened, intimidated the taxpayer, all right, violated the taxpayer's Bill of Rights, and has now caused her to go and lawyer up. And I can tell you right now, this audit is not going to go well. All right? This is going to be a slugfest, you know, going forward. Now, when this happens to you, this is one of the elements of misconduct. If you look in the Internal Revenue Manual, I've given you the site, 13.1.15.2. There are elements of misconduct. If you look at the last bullet point, an IRS employee treated a taxpayer inappropriately in the course of official business, right? Element of misconduct. For example, rudeness, overzealousness, excessive aggressiveness, discriminatory treatment, and intimidation. It sounds to me like we already have an Internal Revenue Manual violation. And by the way, when I send a letter to her and her manager, that is exactly what is going in the letter. Dear Miss Auditor, I am aware that you had your initial meeting. I understand that this meeting did not go well. When there was a question about the QuickBooks file, you threatened the taxpayer and the taxpayer's business to quote unquote put them out of business. Hopefully this is a misunderstanding, because that would be a violation of the taxpayer's Bill of Rights and also an element of misconduct as defined by the Internal Revenue Manual, section 13.1.15.2, and I would cite to this, and then I will tell her that at this point forward she will be dealing with us. Anything she asks must be done in an information document request in writing and sent to us. She will not be meeting with the taxpayer again. She's already been to the taxpayer's place of business. We're not doing that again. And our expectation is we will move this audit along and close it. And what I normally tell them is I will not be consenting to an extension of the statute of limitations. I don't see any reason why we can't get this audit done in plenty of time. So I like to tell them right out of the gate, we're not consenting to an extension, so don't come looking for it. Okay? If you've never seen an information document request, it's Form 4564. This is the top half of it, and then you see it says description of documents, and it would list the documents. You should be getting this from the auditor for any information that they want from you. And to the point where if I have an auditor call and ask, now the reality is it depends on the auditor. There are some that I have a very good relationship with, and if they said, Eric, you know, I just need X, okay, no problem. But the other ones, like this one, where I'm going to have a problem with, anything she wants must be done in an IDR. If I don't receive an IDR, I'm not giving it to her. Okay? Which leads me to the next issue. And this has now come up with this very same auditor, but in another case. And what happened there? The auditor requested information. The client CPA firm submitted, sent it in within a week. Second IDR comes out, not uncommon that there'll be multiple IDRs, right? Auditor looks at things, has more questions, asks for more stuff. Happens all the time. I've had one, we had 37 IDRs. It was a huge audit. Not uncommon. 37 is a little bit much. But 3, 4, 5 IDRs are not uncommon in an audit. IDR number 2, again, CPA gathers the information, sends it over. Generally, within 3 to 5 business days, the responses are going back. Next thing we know, the auditor has issued summonses, and administrative summonses, on the taxpayer's clients. The taxpayer happens to be a real estate developer, has some fairly large tenants in one of her buildings, and the auditor, who, by the way, it's the same auditor, also threatened her, I'm now told in the initial meeting, sends the summonses to the clients, asking them for any contracts they have with the taxpayer, even though she can see what's being paid in. I'll tell you the truth. In my mind, this is merely an attempt by this auditor to intimidate the taxpayer. She's now embarrassed her, right? Sent IRS audit, summonses to clients. Clients do not like the IRS contacting them. And what it does is it creates fear that, why are they asking me about someone I'm doing business with? Maybe I shouldn't be doing business with them. This can be extremely damaging to a taxpayer and their business. Now, the IRS may summons records, all right? The auditor is allowed to summons records. But when? What the IRS auditor is required to do in the Internal Revenue Manual, I've given you the site, 4.46.4.5.1. What that says is the auditor can summons records after they have made 2 written requests for the same information. They should have sent an IDR, information document request. If the information was not forthcoming, they should send a delinquency notice, another letter, which is the pre-summons letter, saying, we've asked for this, you didn't give it to us, please give it to us now, or we will be forced to summons it. If it is then still not forthcoming by the deadline, then they can go ahead and issue a summons. If you have this happen, once again, here's one of the things you need to understand when you're dealing with the batshit crazy auditor. You have to document. You have to document. I would put it in writing. Miss Auditor, we are in receipt of the copies of, what happens is, as the taxpayer, you get a copy of the summons that they sent to somebody else. We are in receipt of the copy of the summonses. We are very confused. Number one, we were unaware that this was an issue because you've never asked about it. Number two, you already had this information, which, by the way, is another violation. You already had this information, as you noted, the deposits coming in from these clients. Pursuant to Internal Revenue Manual 4.46.4.5.1, you are required to have made 2 written requests. We have reviewed every piece of paper you've given us. Every IDR has been responded to within a week, well within the deadline. We do not understand why this was done. Please respond in writing why this was done, and if you made other written requests, why we didn't receive them. Why are we doing this? Why do this in writing? I don't want a he said, she said later, because as it turns out, the audit manager did call and say, she told me she made multiple written requests. And to which we replied, no, she didn't. Right? This is the problem. But the way you deal with somebody who's nuts on the other side, make sure you document everything, because when you later go to appeals, or if we end up having to go for real help, which we'll get to before we end the podcast, you want to make sure that you can show what happened. Otherwise, you're going to be saying, well, I said this, and the auditor is going to document her file. Well, no, they didn't. I asked this, and they didn't give it to me. You want to document everything. Another example. The auditor, if the auditor calls, says, I need X, Y, and Z, I'll say, please send me an IDR. If they refuse, there are a couple things you could do. What I would generally do is I'll send them a fax saying, you called me requesting whatever it is. I have asked you to send me an IDR, and you refused. I don't know why you're refusing, but until we receive the IDR, I don't plan on doing this. If it's one of the auditors I generally like, I would do something like this. I will send a fax or an email saying, got your message, you've asked for this, give me a week or 2 to get on it, I'll see what I can do. If there's any issues, give me a call. If you really want anything else, please send over an IDR so I have a record of it. That's all. Okay? But the key thing when you're dealing with the nutbag auditor, or frankly anybody, even a revenue officer in the collection arena, right? This happens, right? This does happen. Again, revenue officers, the collection people, Their job is to collect money. It's a tough job, okay? Let's just be honest. It's a tough job. But they don't have to be vicious and nasty about it, okay? But if you have somebody like that, you document everything. I fax. You know why? I don't want to get into an argument with them, and I need proof that, you know, I'll send a fax. Got your message. You've requested this. I'm asking for, you know, a week and a half to get this together, so I'll get it to you on Friday, whatever. If that's a problem, please send me over something in writing for my file. More often than not, they'll back off, and the reason being is I'm creating a paper trail. And I will tell you this, in my experience, the only thing a bureaucrat cares about, and when I say bureaucrat, I mean anybody that works for the government, the only thing a bureaucrat cares about is their job. And most of them are unwilling to risk the job, the benefits, the pension, everything else to try to make a point with my auditor. Not always. I mean, there are about a dozen employees that get fired every year for violating the rules or threatening somebody or violating the right to privacy. You know, this is the case where the IRS person decides to go looking up what other people are making. They can't do that, okay? And they're electronically, the IRS has a lot in place to prevent them from doing that. But in every year, there are a dozen of them that get fired for it, all right? So, I mean, there are, like any other organization, you got 80,000 people, the IRS around. Some of them are brilliant, great people. Some of them are idiots. It's like any other big organization, all right? So the way you deal with this, when you're having a problem, make sure you document the file. Send it by fax. If you're going to mail them something, this is not a good time to get cheap. Certified mail, FedEx, make sure you can prove you sent it and when you sent it and that they got it. If you've not seen a summons before, this is a summons. Again, I just gave you the top half. It says you are hereby summoned and required to appear and bring the record shown, and then it lists stuff down at the bottom. So you get the administrative summons. Let's assume I haven't filed my tax return for 2015. Now, I have, but let's just say for the moment I haven't. I will get a summons if I ignore the government long enough. Now, the summons won't say, Mr. Green, please appear at 10 o'clock next Tuesday to meet with Revenue Officer Smith and bring your 2015 return. It can't say that. What it will say is, you know, meet with your Revenue Officer Smith next Tuesday at 10 o'clock, and please bring all of your books and records for the year 2015, including but not limited to bank statements, credit card statements. If I have electronic bookkeeping software, QuickBooks or Peachtree or Sage or one of those, please bring a backup. Why can't they just ask for the return? Well, a summons can only get that which already exists. So they can get my books and records that I am required to keep or whatever I have. They cannot compel me to create a return. Okay? So that's what a summons is. If you're not familiar with it, we're not going to cover summonses in detail today, but just if you've never seen one, if you're listening to the podcast, we very often will put the podcast out as videos in YouTube. Look for the link. You can go and see the slides. You can see what it is I'm talking about. Right? Some other issues that have been coming up. The examiner refuses to accept records. Your examiner refuses to look at records. A lot of and by the way, that basically comes from AJAC. So let me explain. So first of all, the examiner refuses to accept records. Okay? The auditor wants proof that of this expense. So we go with our credit card statements, right, or our canceled checks from the bank. Isn't that good enough? I can show I paid it. Actually, no. Well, truth is, it depends. It depends on the type of expense. And let me explain. All I've done with my credit card statement or my bank statement with the canceled check, I've only proven that I paid for something. But the test for deductibility is that it is ordinary and necessary as a business expense. The fact that I have a canceled check doesn't mean anything. We have an office there, Green and Sklar's. There are 13 of us, right? I buy supplies for the kitchen, you know. Let's say I go to a supermarket and I pay for paper towels and I pay for coffee and creamer or whatever else we get there. If I bring the receipt for Stop and Shop, which is right by my house where I go shopping, well, that doesn't mean anything. How do they know it's for the office? It could be for my house. It's not going to be allowed. And there'll be somebody jumping up and down saying, but I can show you. Well, no, all you're showing me is that you paid. I need the actual receipt to know what it is that you bought, that it is something ordinary and necessary. Now, and I told you it depends. There are some expenses that just are on their face, should be allowed. For instance, we're a law firm. We pay for research software. I don't think it should be questioned the payments going out to the research software company. There's nothing else we would buy from them other than the research software, okay? You know, the copy paper. I mean, that's you know, there are things that we pay for that it's just on, like, for instance, our leases for the copy machines. I don't need an actual receipt every month. They see the payments going out, and it's going to Xerox, who we lease our copy machines from. There shouldn't be any question of what that is. So it depends on what it is, but if you have an expense that could be personal or business, your charges will not be enough. But we've had somewhere we submit the documentation, and they actually will not look at it. All right? And if you press them, what happens is this. I have an audit. The accountant's dealing with it. We are in the background. Accountant gets all the records together, submits them all for this woman's law practice, right? The rent, the research, advertising, it's pretty cut and dry. The auditor sends back an audit determination disallowing all of the expenses, every last one, every dime. When the accountant called and said, how could you disallow everything? We've got all the records. The auditor told him over the phone, oh, I don't look at records anymore. And then a day later, they got a 90-day notice of deficiency. Okay? If you haven't seen one, that's what it looks like. Again, if you're looking at the YouTube video, you can see what the 90-day notice of deficiency looks like. You now have 90 days to file in tax court. Why do they do this? Well, there's something called AJAC that came out a few years ago. Appeals, Judicial Approach, and Culture. What AJAC did is it was the IRS's attempt to get appeals to really just be appeals. Okay? Eric Green was infamous. If I wasn't getting along with the auditor, audit's over. We're done. Get lost, get out of my office, give me my 30-day letter, I'm going to appeals, and I just take the whole thing right up to appeals. My local appeals office, I know the appeals officers, we'll get it sorted out, no problem. And that was pretty much my strategy. And when I did talks for the accountants, I would tell the accountants, you're not getting along, audit's over, we're going to appeals. And I would tell the auditors, I'm like, I know you're going to be a jerk, you're going to disallow all the expenses, who cares? We're going to appeals, thank you very much, goodbye. Well, the IRS got kind of sick of this. That appeals should really truly just be appeals, not Eric Green's exam part 2. And so what they did is that if you go to appeals and you present new information that was not already seen by the auditor, appeals is to take that case and ship the case back to audit. In other words, make the auditor do their job. Sounds great in theory. So for the auditors, it forces them to try to get the information and look at it. But here's what's happened. You know, and after appeals, if you can't work it out, you get a 90-day. So you get a 30-day letter to go to appeals, and then after that, you get this 90-day notice of deficiency to go to tax court. Well, if you go to tax court, you're now on a trial docket. All right? There's not enough time for the case to be shipped back to audit. So appeals just has to deal with it. Well, there are a number of auditors that have learned that this is a great way to not do any work. And so what they do, and this is purely Eric Green's opinion, what they do is they will disallow everything, but they won't give me my 30-day letter to go to appeals because they might get the case back, right? If I go to appeals and say, here's all the records, appeals doesn't want to look at them. They're going to ship the whole case back. Well, that doesn't get us anywhere. But if they give me a 90-day notice of deficiency, now they can't get the case back. They've effectively taken their workflow, proposed an enormous adjustment by disallowing everything, and they've just dumped the whole case in tax court. So now IRS Office of Chief Counsel and Appeals needs to deal with it. And I will tell you, Appeals is getting so overwhelmed, what I'm finding is they are actually getting as bad as Audit, where they don't want to look at it. Twice now in a row, I've had Appeals come back to me and say, oh, we're not going to bother looking at the records, Eric. I agree to knock 25% off under what's called hazards of litigation, meaning that if you go to tax court, you know, we'll just give you 25% to make the thing go away. Well, that's not what I'm looking for. Okay? The system right now is a real mess. Okay? But if you get this, and you're a CPA or an EA, one, you cannot ignore it. All right? If this goes final, your client is now stuck with the liability. Now, the truth is they're not completely stuck with the liability. We have audit reconsideration. We have doubt as to liability offers. We have amended returns. I mean, there are ways that we can get this, you know, we very sneaky tax lawyers can get this thing reopened. But it's expensive and it's time consuming and there's no guarantee it's going to work. Okay? So the reality is you need to do something with this. If you don't feel comfortable dealing with it, call a tax lawyer and get them involved. However, if the case has not been to appeals, you can actually help your client. And I'm actually going to be doing a podcast on this, which is, you know, helping your client file pro se. There's a tax court petition kit you can fill in, and you file it. And once you file that in tax court, if the client hasn't been to tax court before, it will be. If it hasn't been to appeals before, it will be forwarded to appeals, and you'll get your appeals hearing. So what do you do with this? To wrap up the podcast, what do we do with this? What do you do when you have, frankly, just a jerk, all right, on the other side of the table? The auditor, for whatever reason, is just batshit crazy, all right? Remember, one, document everything, right? And I'm not talking about just keeping notes for your file. That's helpful, but I much prefer the thing you can confirm, the facts and the facts confirmation. Certified mail, FedEx, whatever it is. This is not a good time to get cheap. Ask to speak to the audit manager. Okay? Some of them can be very unhelpful, where they're just going to agree. Okay, but at least we've made that attempt. All right? Also, I like, again, when it comes to dealing with this, I like to raise the concerns in writing. I will send a letter to the manager. Now there's a written record that I've gone to the manager, and here are the concerns that I have raised. Because if we do go nuclear, I need to show that we made this attempt. Now, the way you used to go nuclear is with Form 12217. It was on the IRS website. It was to file a formal complaint about an IRS employee. Mysteriously, somehow, that has vanished from the IRS website. I'm not kidding. If you go look for Form 12217, it is nowhere to be found. Right? The IRS took that down, and I can't imagine why they do that, but they did. But don't worry, there are ways. Now, so here's the thing. Again, in the spirit of win-win, you try to go to the group and the group manager. What you want to do is try to keep this within the group. See if they can self-police. But if they won't, we may have to pull the nuclear option. Right? First of all, the taxpayer advocate. It's Form 911 on the IRS website. You send that over to the local taxpayer advocate. There's an entire listing. I've given you the website in the slide. Now, that doesn't sound very nuclear, Eric. You're going to the advocate, and the advocate can be helpful. Well, and the advocate might do something with it. But I'm also going to go to TIGTA, the Treasury Inspector General for Tax Administration, www.tigta.gov. All right. On the right side of the website is Report Fraud, Waste, and Abuse. That is where you file a complaint with TIGTA about your IRS employee bully. So you go to the advocate and you go to TIGDA, who should do something with it, but let's be honest, not always. Well, being a fan and a believer that mere observation changes behavior, I'm also going to call, if we're going to go nuclear, we go nuclear. I'm also going to go to my congressional constituent services. We have congressmen, congresswomen, right? In Congress these days, it is very in vogue to kick the IRS. And most congressmen like to be seen doing something for their constituents who are being abused by the nasty big IRS. Now here's the reality. The congressman doesn't do anything. It's really what happens. But their staff people will send over requests. I give them a copy of the 911 to the advocate and what I file with TIGDA. They're now going to start sending messages to the advocate and TIGDA and the IRS saying, what are you doing with this? What are you doing with this? And as I said, mere observation changes behavior. My belief is that with that, now TIGDA and the advocate may have no choice but to actually do something, because they have some congressman staff person, right, when they're not running around getting coffee for the congressman, calling them up saying the congressman's very concerned, wants to know what you're doing with this case. Okay. So hopefully today, this podcast, you've gotten something out of it. And just remember, you always, always, always appeal. If you have a problem, if you don't like the outside, and by the way, it's the office auditors that do this more. But if you're disagreeing, they'll look at you and say, "Oh, I see this case is going to appeals." Now, I don't know what they mean by that. Is appeals a frightening place to them? Do they get stuck with pitchforks? I don't know what's up with that. You know, oh, I had one of them do this to me, and I don't go to office audits, but over the phone, I questioned something that she had come up with. She said, "Oh, I can see this is going to appeals." I said, "Great, give me my 30-day letter. Let's stop this nonsense." And there's a silence on the phone. She said, "What do you mean?" I said, "I'd rather be at appeals. They're normal." I said, "Ma'am, I gave you proof. It's a business expense. It's a valid business expense. You know it's a valid. I've shown it. Appeals is going to give it to me. If you're really hung up about it, then close it. I'll disallow it. Let me go to appeals already. Otherwise, we can get this done right now." She actually ultimately sent me the notice, and she allowed the expense, and we just closed the audit. But don't be afraid to go to appeals. If you've never been to appeals, I'd much rather be at appeals. Now, admittedly, these days with the staffing and the budget cuts, it's become a little bit more dicey with appeals. But do not be afraid to go to appeals. Here, I've given you the mission statement. The appeals division. Our vision is to promote an independent and innovative environment that drives quality and timely resolution of tax disputes by empowering a highly skilled, motivated, and cohesive workforce. Appeals is a separate function and independent of the IRS office that proposed the adjustment or collection action. Well, I'm not so sure I agree with the highly skilled, motivated, and cohesive workforce. These days, they seem to be in complete disarray and chaotic. But for the most part, most appeals officers are very good. They are more highly trained, okay? They have the ability to resolve things based on what's called hazards of litigation. They can consider the fact that we might litigate and use that as a means of resolving. Exam won't do that. You want to go to tax court, go to tax court. Exam could care less. In fact, if you're going to go to tax court, good, we give you a 90-day letter. That means our case is over. Why? Because we're lazy and we don't want to do anything. Appeals is allowed to, I shouldn't say that. Not all auditors are lazy, but I have noticed with AJAC, as I mentioned, we seem to be getting a lot of this, where they do not want to look at records. It's as easier to give you your 90-day letter and dump the whole case over in the Office of Chief Counsel, whom, by the way, people I know off the record are not happy. Most of the IRS Office of Chief Counsel, people I know, are really unhappy with AJAC, and they are fully aware that this is what is happening, and that's why their workload is going up significantly. All right? But do not be afraid to go to appeals. All right? Again, I'm Eric Green. Thank you for joining us on this podcast, the Tax Rep Network. If you have any questions, please feel free to email me at egreen@gs-lawfirm.com. Give me a call, 203-285-8545, and go check out the other podcasts that we've done. Check out the YouTube videos. And again, thank you for joining us this week. Bye-bye.